Know this: group insurance is written as annual renewable term insurance. Note this: in group insurance, the master contract is for the employer and certificates of insurance are of individual insureds. Group underwriting differs from that of the individual insurance and is based on the group characteristics and makeup. Some of the characteristics of concern to a group underwriter include the following: purpose of the group. The group must be created for purpose other than to obtain group insurance. Size of the group. The larger of the number of people in the group, the more accurate the projections of future loss experience will be. This is based on the law of large numbers of similar risks. Turnover of the group. From the underwriting perspective, a group should have a steady turnover. Younger, lower risk employees enter the group, and older, higher risk employees leave. Financial strength of the group. Because of because group insurance is costly to administer, the underwriter should consider whether or not the group has the financial resources to pay the policy premiums and whether or not it will be able to renew the coverage. Under unique aspects of group underwriting is the cost of the coverage is based on the average age of the group and the ratio of men to women. In addition, in order to reduce adverse selection, the insurer will require a minimum number of participants in the group, depending on whether the employer or employees pay the premium. Number one, conversion privilege. Another characteristic of group insurance is the conversion privilege. If an employee terminates membership in the insured group, the employee has the right to convert to an individual policy without proving insurability at a standard rate based on the individual's attained age. The group life policy can convert to any form of insurance issued by the insurer, usually whole life, except for term insurance. The face amount or death benefit will be equal to the group term face amount, but the premium will be higher. The employee usually has a period of 31 days after terminating from the group in order to exercise the conversion option. During this time, the employee is still covered under the original group policy. Other rules that apply to the conversion involve a death or disability of the insured and termination of the master policy. If the insured dies during the conversion period, a death benefit equal to the maximum amount of individual insurance which would have been issued must be paid by the group policy, whether or not the application for an individual policy was completed. If the master contract is terminated, every individual who has been on the plan for at least 5 years will be allowed to convert to individual permanent insurance of the same coverage. Doesn't need to prove insurability.
John loses his arm in an accident and must quit his full-time construction job. John chooses to convert his group life term insurance coverage for $50,000 to an individual policy. Although he cannot increase the coverage, he does not need to prove insurability, and the policy will be converted to whole life. John will be charged standard rates, however, which would increase his premium.
Let's take some practice questions. Conversion privilege. Which of the following statements about group life is incorrect? A. The policy can be converted to an individual term insurance policy. B. The cost of coverage is based on the ratio of men and women in the group. C. The premiums are higher than in an individual policy because there is no medical exam. D. The group sponsor receives a certificate of insurance. The answer is B. The cost of coverage is based on a ratio of men and women in the group. Group life insurance can be converted to an individual whole life, not a term policy. The group life insurance premiums are usually lower than those of an individual policy. The group sponsor receives a master contract, while the participants receive certificates of insurance. The cost of the coverage is based on the average age of the group and the ratio of men to women. Conversion privilege. An employee quits his job on May 15 and doesn't convert his group life policy to an individual policy for 2 weeks. He dies in a freak accident on June 1st. Which of the following statement best describes what will happen? A. The insurer will pay the full benefit from the group policy to the beneficiary. B. The insurer will pay reduced death benefit to the beneficiary. C. The insurer will pay the death benefit minus 1 month's premium. And D. The insurer will pay nothing because the employee has terminated his group insurance and hasn't started the individual one. The answer is A. The insurer will pay the full death benefit from the group policy to the beneficiary. The employee usually has a period of 31 days after terminating from the group in order to exercise the conversion option. During this time, the employee is still covered under the original group policy. Conversion privilege. An employee is joining a group insurance plan. In order to avoid having to prove insurability, what must the employee do? A. Join during the open enrollment period. B. Provide medical records to the insurer. C. Sign in a statement of continued good health. And D. Nothing. Proof insurability is never required in group policies. The answer is A. Join during the open enrollment period. If one applies for coverage after the open enrollment period, proof insurability may be required in order to avoid adverse selection. In the next question, in group life policies, a certificate of insurance is given to A. the policyholder to keep on file, B. each insured person, C. the group sponsor, and D. the insurance producer. The answer is B. each insured person. In a group life policies, individual certificates are given to each insured person. What type of life insurance is most commonly used for group plans? A. Annually renewable term. B. Whole life. C. Flexible premium whole life. And D. Decreasing term. The answer is A. Annually renewable term. Group insurance is usually written for employer groups as an annually renewable term insurance.